Well, the magical stock for this week really has been Bajaj Corp, and we were discussing this reason yesterday that the management has sold a large chunk to institutional shareholders in order to reduce the debt. And we were making this point yesterday that, as a channel, we really, support Indian entrepreneurs and corporates who may have gone wrong with their capital allocation in the earlier cycle, but are now trying to come out of their deleverage cycle by doing brave attempts. And Kushagra, fantastic to have you back, and thank you for joining us. I guess, we were discussing this yesterday that how stock markets have really given a thumbs up to your stock and the fact that you're taking bold and brave measures in order to check your capital allocation. But my first question, Kushagra, would be, would you like to specify to our viewers and to your shareholders that at the promoter level, what are the debt obligations, and after the stake sale, have the debt problems been sorted out completely?
Thank you, Nikunj, for having me. Yes, the stake sale was primarily done to make the debt at the promoter level zero. There is no further debt at the promoter level post this stake sale. So this was what we call a clean out trade, and that was the commitment given by me, and that will remain so. So there is no more debt at the promoter level.
So let's talk about Bajaj Consumer, the company, and what is happening to the sector per se. The stock in the past had suffered largely because of the debt challenges at the promoter group, but now they have been washed away. So let's talk about what is happening to the business. And how exactly would you sketch the big picture for us at a time when we are staring at a visible slowdown in some of the key large consumer categories?
So as you know, hair oil is the second largest personal care category in the country. It has a total value of about $2 billion, 13,500 crores. Very little competition, basically 3 or 4 players from Marico, Dabur and Bajaj. We are the second largest hair oil company in India. Surprisingly, after 20 quarters, we are seeing really rural growth lower than urban growth, and considerably lower. It has never happened really that rural growth has been lower than urban growth. It's almost, if you see overall growth has come down to 4.1%. Rural is at 1.9, urban is at about 5.8. So these are very dismal numbers. I don't see over the next couple of quarters anything miraculous happening in terms of growth. But we are confident that we will be able to gain market share by following the strategy that we have now that we've got Bain inside. And we've already implemented that in Bengal. And we're going to do that slowly pan-India. But the economy is slowing. Volumes are considerably lower than what they used to be. In fact, as I said, we don't even remember when volume growth has been so tepid for the last number of years. And there is no real sign of revival of growth going forward, at least for the next couple of quarters.
Kushagra, help us understand, and I just wanted on record, that's why asking you really, how much stake will you be holding in Bajaj Consumer post this stake sale which has happened, and what percentage of that stake is still pledged?
So we post the stake sale, we have 38% shareholding with the promoters, and none of that is pledged anymore.
38%?
Yes, 38% is promoter holding post the stake sale, and there'll be no pledge on that 38%, on this entire 38%.
Kushagra, good morning. Given that you've now done this stake sale, yes, it's received a thumbs up from the market. Given that it's such a fantastic company, though, would you at some point look at perhaps buying again from the open market, even if it is down the line? Is that something you'd be open to considering? Are you, currently happy with the 38% stake that you're currently at, or would you be open to upping that going forward?
No, definitely as per SEBI rules, you're allowed creeping acquisition. And over time, we will be raising our stake back to at least above 51% over time, as per the rules of the country.
Understand that, and that's the punchline. I guess, you must have sold your stake because to manage the debt problem. But what you are saying is that ideally, In a business like Bajaj Corp, you want your ownership to be more than 51%. Whether that happens this year, next year, 3 years, we don't know, but that is where directionally your stake would move.
Absolutely. There's no doubt about it. This was a one-out thing. See, reputations are built over generations. They can be lost in a second. Stakes can be increased with time. Once you lose your reputation, it can't be regained. But once you sell your stake, it can always be bought back. So we will increase stake over time. We will definitely take it to at least 51%, if not higher. It's a matter of when, not if.
Near term though, Kushagra, because of the debt obligations that you have, would you be willing to sell more of that 38% balance stake that you have?
I think I made that explicitly clear. There is no debt at the personal level post this trade. So why would I need to sell anything?
To just change the scope and talk about the other group businesses, the sugar business, the power business. You have a presence in real estate. What is happening on those businesses? Can you give me a sense of where those businesses are headed? Is there a cash flow challenge there?
No, I don't think there is any presence in the real estate business. We had one or two small construction activities, which is now over and done with. So that is no longer an issue. Sugar, the business is regular post the restructuring 4 years ago. There is no immediate impact on cash flows. Payment to banks are regular. Business is doing fine. The cycle is looking good now with the ethanol play coming in. Things are much better. But again, it remains an extremely politically sensitive industry. So things can turn in a matter of a day, because if they disproportionately increase cane prices and they don't allow sugar prices to go up, that can change the fortunes completely of the sugar industry. So that will remain, has been and will continue to remain an extremely politically sensitive business. The energy business, as you know, we've got permission from SEBI to do the IPO. I can't speak much because of SEBI rules and regulations on the business, but it's an 8-year-old business, extremely profitable, and at some point we plan to do the IPO.
Then Kushagra, give us a sense then, you've talked about really where you stand with the current businesses, but with the IPO coming up, and we don't have to get into the numbers of the business, but overall strategy and the play going forward, just take us through that, what the vision is now going forward for the group.
I think, IPO is, we're keen to do the IPO, but we're not desperate to do the IPO. So if market conditions are good and markets are stable, we will do that. I can't speak much on the IPO because of SEBI restrictions and lawyers not permitting me to say much. Forget about the company, I can't speak much on the power sector in general. But as you know, there has been the capex cycle in the power sector has been virtually dead, at least on the coal side. And with an annual growth rate of about 5% in consumption, and as mentioned earlier, with every household getting electrified, demand doesn't seem to be a problem over the next 2-3 years, and supply side could be an issue going forward. So things look good in that business over the short to medium term.
We haven't interacted in a while, and last time when we interacted with you on this forum, we extensively spoke about your sugar business. We did not speak about your consumer business. So let's say if we interact next time, and if I take the clock forward, 2020 to 2023, what could be the face of the group in terms of where would you be expanding, where would you be contracting, which are the business you are looking at incubating, which are the business you are looking at contracting or spinning off completely?
I think the consumer business will be much bigger than where it is today by 2023. The strategy that we've adopted, if it pans out the way we do, it will be much bigger than what we are, so we could be talking about that. Hopefully the IPO of the power business will be done well before that, and there could be stuff we could talk about that. And what the future holds in terms of any other diversification is very difficult to say in the current environment. Let's just take it one step at a time.
Kushagra, just to get a sense from you on the benefit of the corporate tax cut that we've just recently seen to the companies or to the group. Just talk to us about that, how much of a difference it will make in the coming quarters for you.
So in the consumer business, yes, it will make a difference, and that got reflected in the numbers in the last quarter. Even though volume and value growth was very low single digits, there was a 10% increase in net profit, primarily because of the tax break. I can't talk to you on the power business. On the sugar business, doesn't make a difference because we had accumulated losses, so the tax doesn't make a difference over there.
How is it that you're going to be deploying that tax saving? A dividend, buyback, Kushagra? What's in the pipeline?
No, I think just reinvesting in the business. We have a 5-year strategy to try and double our market share in the consumer business, which has been openly stated. So even if it means that we need to take a hit on margins for the short to medium term, we would do that. But be very aggressive with our strategy of doubling market share over the next 5-6 years in the consumer space.
Top line that you're looking at in 5 years then for Bajaj Corp, Kushagra?
I don't think let's go with the top line number. I think because we don't know what is the growth rate going to be for the hair oil sector in general. I think let's just go on the market share figures. And our target is that we are at about a 10% market share in the total hair oil segment. And we've openly stated that our ambition is to be double that over the next 5 to 6 years. We have a strategy in place how to do that. We started implementing that. We've done it so far only in one state as a test case. It has proved to be partially successful. We are now planning to do that in a second state and then slowly take it pan-India. So early signs are positive, but too early to say that we've actually been successful completely with our strategy. So still a couple of quarters, maybe 3-4 quarters more to really feel that our strategy has worked and we're on the right path for growth. So even though the segment is not growing, we believe that with this strategy we could at least grow at a much higher pace than what the hair oil segment is growing. And that's how we plan to capture market share. So if that means over-investing in the brand, reducing margins by a couple of percentage points, so be it. But in the long term, if you have greater market share, at some point the sector will start growing. It can't be at low, 2, 3, 4% kind of growth forever. Maybe 6 months, 12 months, 2 years, there may be no growth, but eventually the cycle will pick up. Indian economy is very strong and resilient. So at that time, if you have a higher market share on a much bigger base, the numbers will then be much better than what they are today.
I may sound slightly repetitive with this one, but correct me if I am wrong. What you are saying is, first, at promoter group, there is no debt. Great news. You are committed to make the consumer business bigger, and there is plan to take the power business public, and you're committed to stay invested in the sugar business. Am I right in what I'm summarizing?
I think absolutely, Nikunj. You forgot one thing, that we want to eventually increase stake in the consumer business over time. So I might just add that in. So we're completely committed to all the business that we have. And post the IPO, as and when it happens, a lot more action will happen at the group level.
Businesses or individual small businesses which you are incubating, which are at an inflection point and which could really add substantial, they may be small businesses, but they could become big business in 3 or 4 years. And similarly, are there any businesses which you think, or small businesses in the group which you would say, look, I don't want to be in them because they do not make sense for me now?
No, so we had started as an experiment real estate a couple of years ago. We realized that is not our forte, so we've done the projects and over and done with it. Other than that, we haven't really incubated anything or looked at anything afresh, even at a small level within the group. So we just have these 3 companies: the sugar business, the consumer business, and the energy business, which is what we have. They're fairly large businesses, all 3 of them. And we hope to grow all of them in their own strategic manner.
we're speaking after a while, but I'm hoping that when we meet next time on this forum, it's not going to be a long winter. We will meet much more regularly and much more often to get updates on what's happening in your group. But my compliments, Kushagra. Very few Indian corporates in the past who've gone wrong in their capital allocation, have come out so bravely, even by selling family silver. And I think stock markets are rewarding it, because your stock between today and yesterday is up more than 30%. I mean 26%.
Well, thank you, Nukin, for the compliment. As I said, reputations are built over generations. Once they're lost, they're gone forever. But stake sale, you may sell today, but you can always recoup them over a period of time. So the reputation is more important than wealth, at least for us in the Bajaj family. So,
well, appreciate that. Thank you for joining us.